Today, we're digging into the anatomy of a truly explosive stock surge. We're talking about OneMedNet Corporation, that's ticker ONMD, and a single day of trading that absolutely turned heads on Wall Street.
Get this, in just one trading session, the stock skyrocketed by more than 148%. So what we're going to do is break down all the technical data to figure out what's behind this wild ride and, what clues it might give us about what happens next.
And just to put that into perspective, this was no small jump. The price literally more than doubled, going from just over $1 to $2.56. A move that massive? Yeah, that demands a much closer look.
So really, the million-dollar question for anyone looking at a chart like this is, what in the world is going on here? Is this the beginning of something huge, or is it just a flash in the pan? Well, to figure that out, we've got to play detective and follow the technical clues. Okay, let's dive right in. Our investigation is going to start with the two most basic, most fundamental pieces of evidence you have when you look at any stock: its price and the sheer volume of shares being traded. The data here is, well, it's just staggering. It's not only the price jump. I mean, look at that volume. Over 285 million shares changed hands. This wasn't a quiet little move. This was a stampede. It points to an absolutely enormous rush of buyers, creating what analysts call explosive buying interest.
All right, now for the really fun part, the forensic analysis. We're going to start decoding what some of the more complex technical indicators are telling us. And believe me, this is where the story gets really, really interesting.
So first step is something called the Relative Strength Index, or RSI. And the slide puts it perfectly. It's kind of like a speedometer for the stock's momentum. It tells us if a stock is being bought up way too fast, which can be a huge red flag, or if it's being sold off too hard.
Now here's the kicker. A reading over 70 is usually considered overbought, which is basically a warning sign that the buying is getting a little out of hand. Well, OMD's speedometer isn't just in the red, it is pegged at over 91. That's a massive signal that the stock is in what we call extremely overbought territory.
Next, we've got Bollinger Bands. And again, that guardrails analogy is just perfect. Think of these bands as creating a channel, or a lane, showing the stock's normal, expected trading range. As long as the price stays inside those guardrails, everything's pretty normal. But when it breaks out, that's when you pay attention.
You can see right here just how wild this got. The stock, trading at over 250, didn't just touch its upper guardrail, it completely smashed right through it. The top of its normal range was supposed to be around $1.75. This is a textbook sign of what they call extreme overextension.
And finally, let's take a look at the MACD. You can think of this one as a trend spotting tool. It basically looks at different price averages to tell us if the current trend, whether up or down, is getting stronger or weaker. A positive reading, like we're about to see, means the bulls are still running the show.
And here's the plot twist. You see, unlike those flashing red lights we got from the RSI and the Bollinger Bands, the MACD is strongly positive. This tells us that, despite all the warnings, that powerful upward momentum that caused this crazy surge is still very much alive and kicking. So, what our investigation has just uncovered is a major conflict in the evidence. On one hand, you have signs of just incredible, powerful momentum. But on the other hand, you have indicators flashing signs of extreme risk. This right here is the central dilemma for anyone trying to figure this stock out.
And this slide just lays that tug-of-war out perfectly. You've got the bull case. The MACD is positive. The underlying trend is strong. Everything looks great. But then you have the bear case, and it's just as convincing. The RSI is screaming overbought, and the price is blown way past its normal range. It's a classic battle between red-hot momentum and the risk of overheating.
Okay, so let's move on to our final section and see how the analysis weighs all these conflicting clues to come to a verdict. I mean, when the data's pointing in two completely different directions, which path do you even follow? So, when we put all the evidence together, a pretty clear picture starts to form. The momentum is without a doubt bullish. You can't argue with that price action and volume. But, and this is a huge but, the stock is in a really precarious, extremely overbought position. And with no clear support levels underneath to catch it, the risk of a sharp, sudden fall is incredibly high. And that brings us to the final conclusion from all the technical analysis. It's a very clear warning. Because while the upward force is powerful, those overbought signals are even more powerful. This whole situation is defined by its high-risk nature, where the chance for a huge gain is matched by an equally huge chance for a fast, painful pullback.
And this really just leaves us with one final thought. This one stock perfectly captures a classic market dilemma. When you see both incredible strength and extreme danger signals at the very same time, what do? It's the ultimate test for any trader. Do you chase that thrilling momentum, or do you step back and listen to the warnings?